Good morning, traders. This is Bruce at VeloxPro. If you can hear me and see my screen, can you just type yes in the questions? So we are good to go. Okay. Yep. Thanks, guys. Excellent. All right. Well, welcome to day 2 of the Bookmap professional webinar series. We're going through all week with a different trader each day and understand how they integrate Bookmap and order flow into their trading methodologies. And today we have FuturesTrader71, Morad Asghar. Many of you are already familiar with him. He's been trading for 16 years, started out as an equities trader, and then has moved on up through into futures. He ran his own prop shop and has gone through a few different changes in his trading styles from tape reading to volume profiling, and then now working at S5 trading as well. Helped establish the S5 brand, well, I'll let him talk about what he's going to present. And just one more issue here. These webinars are recorded, and this is where you're going to find them under bookmap.com, and it's under the education tab here. Okay, so once you become a member here and you sign in, they'll be under this link here. So click on the link, and that will bring up the YouTube play video here. Click on the upper left-hand corner for the playlist. All right, so you can see the list here of all the previous webinars. All right, so you can click on that and access all of them here. And you can see the one yesterday from Monday. This is Metes, if you want to review that one. All right, so one more thing, I forgot the risk disclaimer here. Trading futures and options on futures involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. You can find out more about Bookmap at bookmap.com, and like I said, become a free member for those resources, and you can reach out to us at support@veloxpro.com. And with that said, let me turn it over to Morad. So just a moment.
Thank you.
All right, thank you, Morad.
Thanks. Good morning, traders. Thanks for joining us and listening in this morning. Appreciate you being here. I know your time's valuable, so I'm going to be as succinct and to the point as possible. Bruce went through the disclaimer. He saves me from having to read that thing. I do in every webinar. It's required. But today, my objectives are very, very simple. Hang on, my slide's not changing, which means I didn't set it properly. 1 second, please. There we go. So slide settings, and here we go. All right, let's do that again. There we go. So my objectives today, 3 of them. I want to demonstrate how a scalper campaigns around a position. Campaigning around the position is a key part of what I do. Most traders in here are likely all in, all out, or they put on a position and they wait for their target or their stop to get hit. Most will likely overmanage or micromanage a trade. It's a curse that we all have to get through at some point in our careers. But as you get larger, as you trade a bigger account, you'll likely want to trade around positions to improve your average. So that takes us into demonstrating how to use a theoretical average. Theoretical average is something that I kind of dreamed up back in 2003 as I was scalping a lot, and this is different than a platform average. I'll describe what the theoretical average is and how it works and why it's important, but also I want to show you a couple of examples of how I use the cumulative volume delta. The CVD is something I worked very closely with Bookmap to incorporate, since Bookmap is just an incredibly powerful tool, in my opinion, the best out there for reading a heat map of what the order and depth flow is doing, I thought it was a natural thing to be able to see what the cumulative volume delta is, and I'll describe what that is and show you how I'm using it. So let's start out real quick by just going through the parts of my screen that I would like to discuss. So most of you have seen this. This is a replay. I was intending to just do a just show the market and show what I would be doing in the market. But the day is very, very sluggish, and I don't want this webinar to last 3 hours while we wait for a trade to play out. It's not realistic for me to demonstrate what I want to demonstrate while waiting for it on the live market. But I normally would prefer to execute live just so you can see how it's done before your very eyes. So I'm doing a replay. This replay is of the 6th of February, Monday, a week ago, and I want to set up the day and show you what ideas were set up for that day. I do this morning trader bite at 8 a.m. Central, 9 a.m. Eastern every day. The best way to find out about it and to watch it, it's a live streaming daily broadcast that I do. And the best way to find out about it is to just follow me on Twitter. You'll find me on Twitter under FuturesTrader71 or twitter.com/FuturesTrader71. You'll get the invitation or the link to the daily trader bite, and in it I go over what the market has done, how things are shaping up overnight, what news events are likely to influence the trade, and then come up with my key trades for the day. And then once that's done, I spend the rest of the day basically stalking those trades, looking for which one the market is likely to play out, and then look to trade in the direction of those plays. So that's the scenario that I follow pretty religiously day in, day out. And those who've been watching the Trader Bites for the last almost 3 years, I think, have probably gotten to the point where they can tell me what I'm about to say before I say it. This screen, what I'm displaying here for all of you is you can see the heat map in front of you. What's different is I use this Cloud Notes column. Cloud Notes are these levels that I broadcast. They're on my charts. They're the same levels here. They're called flex levels on Investor RT, and they're being pulled into Bookmap as Cloud Notes. And the way you get them is to point your server, to point this link to my server here and grab the file. It's updated pretty much every day. And so as the Cloud Notes just give me major milestones. They're not levels that I'm going to trade against today, but they remind me of areas that are important to me, you know, in the bigger picture. And of course, I use the order book depth in the form of numbers as well as the histogram, and then I'm looking for quotes chart in the chart depth, and then I'm looking for volume for the session to form the profile. What you'll notice it's unique here is the bottom pane has this indicator called the theoretical average, and that's what we are going to focus on. And this is a custom indicator. This is the first indicator that has been created, as far as I can tell. Maybe Bruce can correct me. We are the first to use Bookmap's new API to form our own indicator. And then next to that is the cumulative volume delta, which the cumulative volume delta just measures how many contracts traded at the offer. So the offer is the seller. So right now the market just traded a 1 lot, 3 lot on the offer. Now it's trading on the bid. And what this is doing is it's keeping a sum total of what has traded on the offer, which adds to the CVD, minus what's trading on the bid, which subtracts from the CVD, and it's keeping basically a continuous measure of the aggressor in the market. So as if there are more people selling at the bid, in other words, they can't wait for their offer to get lifted, instead they cross the market and hit the bid, the CVD gets lower and lower until it goes negative, and it's telling us that the sellers are dominating the current action. This CVD is filtered. I have it set right here to 13 lots as a minimum. The reason I have used 13 lots, that number comes from a study that's done by one of Stage 5's members. He runs a statistical study that determines percentage-wise what the different lot sizes are that are trading on the various products, and 13 is the second standard deviation size that's traded in the ES. So I'm filtering for that and treating it as the bigger lot size. Normally we would go to 99 or 100 lot or whatever, but those numbers don't make any sense anymore for the CME because of the way they report their trades. I won't get into that. But essentially what I'm comparing here with a CVD 13 lot, and this is a variable, versus the CVD of everything. So the green line as set here shows every single tick that goes through, whereas the blue line shows is measuring 13 lots or higher. You'll notice that my CVD resets at 8:30 Central. I'm in Chicago. It resets right as the cash opens. I want to see what the market has done since the stock market is open, because this is an index product. If I'm on crude, then the CVD would be set to 8 a.m., which is when the pit opens in Chicago, and so on and so forth. And so I track the CVD for the entire session from that point forward. So as we push forward and we cross the 8:30 mark here, which is when the equities open Chicago time, 9:30 Eastern, you'll see that both of these lines will collapse back to zero and start counting from scratch. Okay, the theoretical average. So everybody here has traded on the platform, and a platform will report only those trades that add to the initial position. So in this, for example, if I was to sell short 22.88 and I was to sell short 22.89, the platform will first show 88 as my average. Then when I sell the 89, it'll show 88.50. Then if I sell 90, it'll show 89, and so on. However, what platforms don't do is they don't actually take into account the profits that you've made. And so if I use the platform average, it would start here, then it would go to 88.50, then it would go to 89, and so on. And as I add to the position, it'll just keep averaging whatever that is, okay? And what the theoretical average does is a lot more than that, which is it will take into account, why isn't this erasing? Are we frozen? Looks like we're frozen here. Hang on. So yeah, it looks like my screen is frozen. Let's see. Let's bring it back. Yeah. Okay. Yeah. So this is going to be hard to demonstrate. Let me unshare my screen for 1 second, just to unlock this. Okay, you should be seeing like the default screen, and let me try to reshare it here. Let's see if this cleans it up. Does this clean it up? Or is it a mess like I'm seeing here?
That's a mess.
Okay, so yeah, we thought we had fixed this issue. It keeps propping up on these webinars. Here we go. Okay, so when I have the drawing tool on, it really messes with things. So this is good. At least we got this unlocked. So the theoretical average, it takes into account the profits that you've made. So here's the 8:30 open. There's the 8:30 line. You notice my CVDs jump back up to zero right there, and now they're measuring. You can see that if you look at the if you look at all volume that's traded, we could see the buyers are in control. So I'm going to pause this for a second just to set up the day so you can have some context. This day is the 6th. That's the day right off the right to the right of the screen. The prior Friday was non-farm payrolls, I believe, and which was the 3rd, and when the market had jumped up, left a gap behind, and has put in what's called a P-shaped profile, a lot of volume at the high, and the market this particular morning was opening lower. So the market this day happened to be opening at 2287, right down here, and the main ideas, and you can see these on the TraderByte, the main ideas for the day are here. Let's open this. Let's take this and play it back 1 second. The main idea for the day is to be a seller on the first test of the 2291 and 2292 area. That's what we're looking for that particular day. So as we come into the 6th, we have this TraderByte that was recorded that morning. So here it is. This comes to us from the 6th. And as we move forward in time and look at what the main ideas for the day are, there's the primary idea of push. So this is the day that we're looking at currently. The primary idea is we're likely to push towards 2291, 2292 right here, rotate down, and once we rotate down, if it's not able to push through where it opened, right, in the 2287 area, remember this is done pre-market, so there's no way for me to know what the market was going to do at this point. This is just my planned trades. These are my planned trades for the day. If the market does not fail through the open, then they're likely to try to push higher and push the high of 2293 that was put in on Unemployment Friday. That's the primary trade idea. The secondary trade idea is to make an attempt at the 2291, 2292, fail back to the open, make a second attempt. We have a lower high, a failed high or corrective high, and then the market is likely to push lower, and the goal is to take out the non-farm payrolls Friday low, and then after that test 2281.50, which is the gap. Does everybody follow this plan? Remember, this is pre-market. Okay, we don't know what's going to happen. And the two main trade ideas are we test early against the 2291, 2292, push back towards the open, hold, and then push higher. Okay, that's plan number one. That's the most likely plan, or the big trade of the day, the main idea of the day. And then the second plan is for the market to push towards 2291, 92, push back, make a lower high, extend down, and then move towards 2281, 2280. That's the second plan of the day. And then the third plan of the day is to fail at 2292 and then fall back towards the open and then have a massive move down and then start moving towards balance, which is 2276. This is what's called auction theory. I'm trading using volume profiling, and this is how I'm looking at the market. I'm establishing what the context is, what the market has done, and I'm creating multiple plans for what it might do that day. So to be put simply, you could see this is the day from the non-farm payrolls, and now my job this morning is to look for any test of 2291 and then look at the order flow to see if I can sell against that 2291, 2292, and those are the trades that I'm looking to trade. And then once I sell, I'm going to use the theoretical average to control my position and control my trade and manage my risk. So once I sell, the thing I want you to do is to monitor the yellow line, which is the theoretical average line. Monitor where that line is. Wherever that line is, that line represents the scratch point for my trade. This means that that line represents where my P&L or my loss or gain of the trade is set to 0. If I'm short and the market is above that line, I'm losing money. If I'm short and the market's below it, I'm making money, and vice versa for longs. Is anybody confused by my approach and what I'm doing here? Any questions? Looks
No
pretty clear.
questions. No questions.
I must be so perfect at explaining this then.
I think so. Yeah.
So I seriously doubt that. So here's the market opening. Okay, and I'm going to start my trading panel, and I'm going to just trade 1 lots, and I have the ability to trade up to 3 lots. And the reason I'm keeping the size low is to make it relevant to as many people as possible. So my job is to stalk. So there's nothing for me to do here. I have not defined a plan for the market where it opens. Okay, so there's no plan here right now. My plan is where? Does anybody remember where my plan trades are? Any guesses? Anybody who's listening? Come on, I want this to be interactive. I don't want to just lecture. 2291, 2292. So as we approach, here's where I look. Oh, look at that gray. See that gray turning to white? It turns brighter and brighter as the market is pushing up. I'm afraid to use the drawing tool, so you'll have to follow my cursor here. As the market pushes up and the gray turns to white, that is an important indication to me that liquidity is coming in as the market's moving towards it. If the market's moving towards liquidity and that liquidity goes from white to gray to black, those are just market makers. It's just fake size. It's not important to me. What I'm looking for is liquidity that increases as time goes by and as the market approaches, and then for that liquidity to stay firm and create a collision. A collision is when the market trade size against sizable offers. So if the market moves up here to 2290 against this 1300 lot and it trades a lot, and we get a big dot on the heat map here, that's a collision. And collisions are an important indicator that liquidity is firm, that it's coming in and it's staying there. So right now, I'm waiting for this to push towards my area. So I'm looking for anything that gives, see that liquidity disappearing there? See the gray turning white, turns gray again, and it's coming back in. As soon as we downtick, it's coming back in. That's all fake. That's not an area I'm going to lean against. I'm going to let this market push up there if it will push, and I'm not going to subject myself to a loss there. You can see that the that all participants are very positive so far. They've traded 4,800 more on the buy side than the sell side, and you can see that the bigger participants are participating a lot less. The number is a lot lower. This number is usually lower. The best opportunities with the CVD is when this number is negative and this number remains positive. It means the size has been a seller and the smaller player have been buyers. And generally that creates a condition where we may turn, and we may see that here. So as the market turns up, you'll see these offers disappear and come back in and disappear. Those are of no interest to me. Okay, what I'm looking for is what happens at the 2290 and what happens at the 2291 as we push up. Okay, so let's play this a little bit faster, hopefully without missing our trade. You notice I'm not putting, there's a collision right there. You see that collision? The white comes in and you have a collision. So this gives an opportunity for a scalp towards 2291 if I want to scalp that. So any push down gives me an opportunity for a scalp higher if I want, but because I'm disciplined, I'm going to stick to the plan, and I'm going to just trade the short side because I don't want you guys to start flipping and scalping and doing all this crazy stuff, okay? Notice the collision there, the sell collision caused the CVD to drop very fast. And you notice the bar down here is for sellers. So you see the CVD for big lots is negative, the CVD for everybody is positive. If I can get this market pushing to 2291, I'm golden here. Okay, so I'm going to initiate, so here 2290, I'm going to initiate the first trade. 2290 is firm, okay, and it's likely to push through a little bit. See the CVD for the 13 lots is negative, the CVD for everyone is positive. So any opportunity to push. So here we go. So there's my short. My theoretical average is 2289.75. This is what's expected. It's the same as the platform average. So the theo average is there. Now I'm going to look for an opportunity to add. Remember, I can add up to 3. My main price is 22.91. I just added. Now my theoretical average is 22.90.13. I'm going to work a bid. I think the open is around 22.87.50 or something. I'm going to work that. Let's see where the open is. So 22.86.75. That's where I want to be. 22.86.75, so 22.87.25. I front run the open by a couple of ticks. And what I'm doing here is I'm not just trying to profit on this one trade. What I'm trying to do here is actually have the trade rotate enough so I can take some profits so that this line can move up. My average can move up. So the next test of this low, I'm going to look to scale out. Okay? So this is what we've done so far. So here, you'll notice that my P&L, and I turned the P&L on. I don't usually trade with the P&L showing. You'll notice that my P&L goes to 0 as we approach the yellow line. So watch what happens when this one lot gets filled. Boom, my theoretical average is up here. So now if I wanted to put a stop, I shift, right, shift, left click, a buy stop, right? Why is my buy stop not going in? So shift. Is there a reason why this stop is not going in? In any case, you'll see that the, oh, it's fill or kill. I don't know why it does that sometimes. So here it is. So if I wanted to scratch this trade, I can scratch it at the theoretical average. So, but that's not really what I want to do. I'm not trading for the theoretical average. What I'm trading for is my original plan. Remember, my original plan is one of these, right? I'm either trading this or one. So what I want to see is a failure in this area, a failure to retake this, to take the 22.92. So I'm willing to add here. I'm back to 1. I've locked in some profits, and now my profits have been locked in that moved my theoretical average from 22.90.13 to 22.91.50. Here's another opportunity to sell. Okay, so I'm going to campaign into this. This may be a missed opportunity here. As soon as it goes bid, I'm selling. There it is. So you notice that my theoretical average moves down because now I've shifted my average back up to 22.91 from 22.91.50. And now I'm going to work this last low plus a tick to scale around. That gives me an opportunity to gain about a point. So I'm looking for a 1.5 here. So that's 22.89. Okay. So remember, I have profits that I've banked already, and the theoretical average is reflecting that because our average started down here at 22.19.13 and moved up because we took those profits and rolled them into this position. Okay. The trade is wrong once we push through to the other side of 22.93. I'm absolutely wrong on this trade. I do not want to be on the other side of the point of control with this idea. Okay, so here it is struggling at 22.91.50. Let's expand this a little faster. Okay, and you'll note that as soon as I get to this last low, as soon as it fills this one lot, there, watch the theoretical average. Now remember, this position was initiated down here at 22.89.75, and I added at 22.90.50, which gave me an average of 22.90.13 right here. Then I took a profit down here at 22.88.75, pushed my theoretical average way up there, 22.91.50. Then on the retest, without taking much risk. So this is This is where I was on a loss. This is the heat that I took in the trade right here because it's above the theoretical average. And then when I added, I shifted that theoretical average down to 22.91. Now I took more profit, so I'm campaigning out. My position is back to a one lot. And now my theoretical average shoots up to 22.93. 22.93, right? So now the market has to push all the way up to 22.93 to take me out. So I can just, because my goal, what was my goal for the trade? Does anybody remember? What's my goal for hypo 1 or hypo 2 in this case? Anybody? My goal is to see if it gets back to the open, right? And if it does get back to the open and holds, then I know I'm wrong. I'm going to bail out. But what I'm hoping for is hypo 2. I'm hoping for this, so we can get a strong rotation down, pullback, and a continuation. So my goal is to shoot for the prior day's low, 22.83, and then 22.81.50, the mid of the gap. Okay, so that's I'm not trading just to get a quick one lot off here. What I'm looking for is the market to confirm to me or to show me that 22.91.50 and 22.92 are fairly solid. And that's what it's doing. Notice this large rotation down. The overall CVD is negative. The larger lots are positive. The larger lots are still buying. Okay, the larger orders are still buying. Okay, so there's some dissonance here on the buy side, not promising for me at the moment. I want to see larger lots selling as well. And then any move back towards this zipper range here, 22.90 or so, gives me an add. If I add, my theoretical average comes down to about 91.50 or 91, depending on where I add. And then as it rotates down to this low that it just made at 87.25, I'll take one off again, and then my theoretical average will shoot up to 97, 98, well outside of the range, and then it's a comfortable short. Okay, so what is the heat map saying? Not much. A lot of noise here. Let's fast forward. A lot of noise. So you see the market has failed back towards the open, which was 86.75, right? So it has to, for hypo 1 to hold, this size here has to hold. These white bars here have to hold. So we want to see the market have a large collision, fail to push through, and then make a corrective move and push up for hypo 1. If it fails to do that, then we're on hypo 2, and we want to add and be more aggressive with the short. So here's the potential for the market now holding the open, which was 86.75, and now hypo 1 could be in play. So here I want to see, does it pull back? Does it pull back, hold, and push higher and through, or does it push higher and fail to make new highs and then start moving back towards that opening price, in which case I am done with hypo 1. I'm selling for the rest of the day, and all my trades are going to be stock short using this approach. Okay, so I see sellers are dominant. You see the CVD just ripping to the downside. The large lots are also selling, so I'm nice and comfortable here for now. There is I don't want to create a lack of discipline or turn you all into scalpers, but in these conditions, when the market's zippering like this, I'm looking for opportunities to scalp around this position. I'm looking for opportunities to add short, take some off, add short, take some off, add short, take some off, so that this theoretical average line keeps moving up and up and up and up the screen. Okay, so here's the retest of the 91.50. So I'm looking for the potential for a scratch, right? So it might come all the way back to 93, in which case we have hypo 1 in play. Okay, that's hypo 1 back here. So if it pushes all the way to 93, then this is what we've done. We've sold 91.50, 92. comes back towards the open, 2286.75, and it pushes through to 93, and it holds these prices, and we have the same pattern as Friday. So now I know the short is wrong, and in this case I don't make any money. But if it fails to retest that 91.50, 92 and starts to rotate down again, then I'll get even more aggressive with the short. So here we're looking for a large move down, and we're looking for the CVD to get to drop even more. See, these two lines need to start dropping harder with price, and it gives us an opportunity to sell. There's a decent rotation there. It gives us an opportunity to sell against any pullbacks to any of these zippers. So if I see that it's dropping and then size comes in and it pushes back into that size, I will sell again and take like a 4-tick or 5-tick scale out to improve my position in the market. So with all this trading, we haven't really accomplished much, right? We've only traded between 87 and 91.50 or so, just a 4.5 point range. Not much to write home about just yet. The market is quiet, but this is a good day to demonstrate how we can take advantage of the smaller rotations to get our position into a better place. Lots of selling. You see this CVD now accelerating down to 5,000 versus the 13 lot CVD. Not much to do here. Let's accelerate. What am I looking for? I'm looking for a very large move down, and I will sell the pullback on that move down. Okay, that's what I'm looking for. Is Hypo 1 still in play? Does anybody know? Is Hypo 1 still in play? For those who are paying attention. Remember, Hypo 1 is pushed to 91.92, come back to the opening price, try to push up, and then continue higher. Is Hypo 1 still in play? Yes, as long as this low stays intact, Hypo 1 is still in play. It can still start to rotate up on a higher low. That's when I start to think about my exit. Okay.
Question for you, Morad, from Nathan. Where do you look for the size in the selling for the red and green bars or dots, I believe, by the time?
I'm not paying particular attention to these bars down here, although they help explain what's happening when it gets noisy in here. I have my dot settings too small. I can increase these and start to see, but they obscure what's happening behind them, so I don't like that. So I keep them small. What I'm looking for as far as selling, I'm not interested in these little dots. All these dots don't matter to me. What I'm interested in are collision dots. I'm looking for what dot size do I get when we collide against white, okay? If there's large size and we get a big dot, green or red, that tells me something. That's something that I can use, okay? That's something that I can use. But if it's just these tiny little dots, run-of-the-mill kind of stuff, it's not really telling me much, So you can see these dots here can get larger, but unless they're happening against size, it's really not giving me much information. Here we're trading the open again. So here we have Hypo 1 failing. So what am I going to do now? I'm going to look at this zipper range. Again, I can't draw on the screen because it messes up the screen here. But this range here between 89 and 87.50, this becomes an area that I will stock to add to my short. If I add, my theoretical average will drop, but it'll be well outside of the danger range. But I'm looking to add. Why? Because I am looking to trade now. Here's the big rotation. So this is where it matters. See those dots right there against size? That matters. this tells me something's going on. So you can see that the large lot players, as well as everybody else, is on the sell side. So the pressure, the CVD is saying the pressure's on the sell side. Okay, see how they're hammering through? Okay, so I can play this little zipper here right now for a quick scalp just to improve my average. Let me pull this down so you can see my theoretical average above. So I can lean against this for the continuation down, and then as soon as I get filled, I would trade for this low down here that it made. And the purpose of this little additional trade of campaigning, the purpose of that is to just improve my average, is to attempt to improve my average a little more. My theoretical average, nothing, no pullback. This is really weak. So it took out that low. Now we're done. So this little trade here to get short for this low again is gone. Okay, and what triggers that is the fact that we had this big collision here. You can see the big step down. You can see the size right here on the heat map coming in to show that they're seriously selling into this. Okay, this makes for a bit of a boring trade here since it's just one directional. So let's move the time forward on our charts because we needed some frame of reference to 1225, which is where we are. So here's 1225. So this is what it's done. So now I know I have the mid at 2287.50. I have VWAP at 2288. I have a zipper between 87.50 and 89. This area here gives me pretty good confluence to sell again. Okay, that's what we know about the market. So what was that area again? I'm looking for 87.50 to 88 area for an addition. So any push up there will get me shorting again. Let's speed it through. I'll show you my dot settings, my contrast settings, and all that in a minute. I know people want to see that. Any pop here towards 87.50, 88 is going to be sold because I'm playing Hypo 2. Again, Hypo 2 planned pre-market was this. This was Hypo 2. This was the plan before the market opened. Push, pull back, lower high, explosive move down, pull back again. This is the 87.50 area that we predicted. Aim for around 81.50 or the low end of the gap, which is 80 even. Okay, so I have one more trade in this. One more trade in this. If it pulls back high enough, if I see that I have some liquidity here, I'm going to add to this and scale out. See this low down here that we made, 83.50, that becomes the area of interest for me to exit. So as soon as I get in, I'm going to put out at 83.50 plus 2 ticks to scale out of the additional contract. As I campaign around the position, my average, my theoretical average again, is 93. Okay? Let's reduce this. Does everybody follow what's going on here? As this is kind of going sideways? It seems like a lot of information, but you do this day in, day out, and you see this all the time, and it just becomes second nature. And I'm always looking to campaign around the position, always, because I can improve my average tremendously by continuing to campaign against logical areas. The logical area right now is 87.50, 88. What's my backup for 87.50, 88? I do not want it above this zipper zone here. So anything above 89, I'm tossing the additional contract, potentially tossing out the trade. Here's a consolidation. Consolidations mean balance. Balance means we're likely to break out of here strong. So do we break to the upside or to the downside? I prefer it breaks to the upside so I can hit this 87.50, sell them. So see this consolidation? Love these consolidations. This tells you that, hey, pay attention, wake up. Something is likely to happen Once the market consolidates like this, it's compressing, it's forming energy, it's squeezing. A lot of size coming in. This is the last hour of trading. Not good. So we didn't have much of an opportunity to campaign here. But let me, let's see what's happening in the chart here at this point. So it doesn't really quite get to 81.50, right? So we never get there. We get back to 87.50. The caution here, it's 230. See how the market gets thick? These are all market makers looking to balance. So we don't have a trade anymore. There's nothing for us to do here. I do not initiate new trades into the closing range, but just for the sake of argument, I'm going to campaign around this position just to see how the theoretical average improves. Okay, so let's add. Market likes to pop on the close. See how the theoretical average moved down? Okay, so let's add. As soon as the bid is filled, see how the theoretical average now gained a tick because I made a tick. Okay, so now we're going to be as like a full-on scalper and just scalp the close. Let's scalp it. Hopefully this 87.50 gets lifted. There you go. See, the market likes to rally on the close. Here's the close, and I basically took the position back to break even here, essentially. If this gets filled, my average moves up, and I'm in the money. There, my average pops up again. My average is back up to 93.25. I'm left with a one lot, and the market, and then the trade is closed. My position is 0, and you can see my theoretical average. I ended up with a theoretical average of 93. Another way to look at this is to say the difference between my entry and where the theoretical average ended up is how much money I made. Okay, market's closed, and that pretty much ends what I wanted to show you. Unfortunately, I don't study the days I'm demonstrating because it just changes the way I look at the market because I know what's going to happen. I just picked a random day from my list of feeds. But this should show you how using this Theo average helps you relax in the trade. Like once I see my theoretical average is over an important point, in this case, the important point was, I would have loved to see it above 94. Knowing that my theoretical average is above 94, it means that the market has to work really, really hard to take out my short and take me out of the trade. So I don't need to sit there and fret and be nervous about every single tick as the market trades. As long as my theoretical average is well above the market. So you can see once the market comes down here, I'm not worried. My theoretical average is way above here. It's beyond my stopping point, right? So I don't need to sit here and worry, oh my God, is the market turning? Oh, look at that bid, it's so huge. It might cause the market to move up and start to freak out. With the theoretical average, I can manage what happens here just by moving it away. I can manage my emotions, I can manage how I trade and stay objective with the trade because there's no immediate threat. Does everybody follow that? And then as far as the CVD, one of the requests I'd made to Bookmap is to fix these two scales. You see the blue scale down here goes up to 20,000 at the high end, and then the green scale is at 20,000 lower. I'd like these scales to be the same. I would have wanted to demonstrate, and there are opportunities here to demonstrate, when the CVD is separate, when you see the separation between the large lots and the small lots, especially if the small lots are negative and the large lots are positive, or vice versa. What I've noticed, and I'm actually in the process of creating a study for this, what I've noticed is you get these opportunities where I'll give you an example, if the small lots are buying and large lots are negative, and we are pushing into high liquidity and we have a collision, okay, so again, small lots are buying, okay, so small lots are positive, large lots are negative, and the market is pushing up. It's following the small lots. It's moving up. But then we go into a large offer. We go into a large offer, which is a white line here. Then this creates an excellent opportunity from what I can tell, and past performance is not indicative of future results, but it creates an awesome opportunity to go with the large lots and sell it. And I've noticed that, and I'm testing that setup or trade idea for an edge, for a statistical edge. So that covers our objectives. Hopefully I didn't lose you all. I'm showing you how to campaign around a position. I showed you what a theoretical average is and why it's key to managing the trade and how you flow with the trade, getting yourself to relax in the trade. And I wanted to show you an example with CVD dissonance, but we didn't have a good opportunity on the day I picked. Again, I always pick these days at random because I want to take them for what they are versus, you know, seeing what trades I should take, taking them in front of you and saying, hey, this worked. I just picked a random day. I didn't study it. But, you know, we'll continue to talk and you'll be able to see it. Now, some questions probably that have arisen. I'm not sure if Bruce or not. It says CVD 13 lot. Why 13 lot? Why is this 13 lot? And the reason why it's 13 lot is because there's a study that's done that gives us an idea of what. If Hampton's here, Hampton, would you please post the link in our S5 chat room so I can pull up the spreadsheet if you don't mind? I don't have it in front of me. Actually, I think I have it bookmarked. Let's see. Let me grab this for you. Here we go. Here we go. This is it. This is a spreadsheet that's produced by a brainiac nerd trader that we have at stage 5 named Hampton. He's not a nerd. I just like to pick on him. And what it does is it studies the trade sizes for various periods, like the number of sessions, 30 sessions, 20 sessions back, 10 sessions back, 5 sessions back, and it looks at the entire session, and it looks at the first 2 hours. And what this is saying is 95.45% of the time in the S&P for the last 5 sessions, that's the number I use, the most common, the trade size that is on the edge of the second standard deviation, which is 95.45% of all data, this is just statistics, if you remember statistics from high school or college, is 13. So anything 14 and above is considered rare, okay, in the data set. So I put it at 13 just to be inclusive of it, so I get that number. For NQ, the lot size is 3. For crude, the lot size is 5. For the euro, the lot size is 4. For gold, the lot size is 3. For the euro stocks, the lot size is 103. The euro stocks, the Bund, the DAX, those are reported much better because you're seeing the buy side or the demand side. So they're using 103 lots there, 57 lots in the Bund, and 31 lots in the 10-year, and that creates this filter. So I filter for those, and that gives me my quote-unquote proxy to the big lots that are going off in the S&P. So that gives me a measure of all the volume that goes off on the bid minus the volume on the offer minus the volume on the bid with 13 lots or more. And then the next CVD has no filters on it. Both of them restart daily at 8:30 because I want to see what they are from the time the New York Stock Exchange opens, which is when the product really trades. Everything before that is really just proxy trading. From the time it opens, both of those reset, 8:30 a.m. Okay. From that point on, I'm comparing the the performance of these two lines against each other as the market trades up and down. This is like, for those of you who use the market delta footprint or something like that, you're using that to look for divergences. This is a bit of a similar idea, but I'm applying it in real time here, and I don't need to see what each number traded was at every. I don't really care about that as a trader. It doesn't help me at all. So I'm not a fan of that. And then the theoretical average indicator, again, this can only be received in the S5 Bookmap version. It's not in the native Bookmap version. This is a custom indicator that is offered free to all of Stage 5's traders. This goes along with a free chat room, the weekly webinars, and I'm not going to do an advertisement for Stage 5 here, but the theoretical average is an extremely important way for me to control my risk and understand where I stand versus where the market is with any given trade. Okay, so those are the three items the two items I wanted to cover today, and hopefully this was a demonstration of what it looks like when you're campaigning around a trade and what it does to your overall average. We didn't get a very good opportunity given the random day I picked is not one that's very conducive to scalping back and forth. It was a little bit more directional, but this should give you an idea, something new and unique to look at as far as how I'm using the heat map coupled with the theoretical average and connected with the volume delta to come up with higher probability setups. Remember, for those of you who are familiar with my charts, you know I watch the cumulative volume delta here all day. This is what this bar is, and this is what it is on the larger lots, on the larger lot sizes. And I'm constantly comparing the performance of these two versus price constantly to see what the market is doing. Okay, so that's that. For those who want to take a look at this software again, if you do have Bookmap, you can get S5 Bookmap. You just have to ask to be moved to the S5 version. The costs are the same and everything else. Important tools and links to get the theoretical average feature. You must have the S5 Bookmap version. You can get it at s5bookmap.com. There's a trial there, I believe a 14-day trial. And you can request, if you already have Bookmap, you can request to be shifted if you want that information. And then as far as my approach on the market, how I see the market, how I trade, all that stuff, I would strongly suggest you take a look at the daily Trader Bite to get context for the day. But if you want to look at my approach for how I'm trading the market, remember I've been doing this professionally for a long time, and I haven't changed how I trade for about the last 11 years now, just using volume profiling and really understanding context so that my position and my view on the market is strong and it's backed up by statistical probabilities whenever possible. Okay, so that's what I had for you today. If you have questions, if you need to get in contact, just go to my website, FuturesTrader71.com/contact, or email me. I prefer that you use the contact form. It's easier for me to see, and there are staff that can answer more quickly than if you send me an email. Are there any questions I didn't address? Our hour is up. Our hour of power is done.
Tried to answer most of them, and you were nailing them along the way here. Let's see, just one here. Kevin was asking about, or a few here, but do you enter stops with your opening trades for protection against violent moves against you? He saw that you set a stop at the theoretical average after you're already in the green, but what to do at entry?
Okay, so
and how you determine that distance?
It's a tricky thing, that question, okay, because I personally do not use hard stops, and here's why. I'm not recommending this for anyone. I don't use hard stops because I'm trading on a fiber connection. I'm about 6 milliseconds from the exchange. There's a very, very low probability, relatively low probability, that my connection would drop and I would be hanging out to dry with a big position on and a bunch of orders. So I manage my stops dynamically. As a person, I've found that whenever I put a stop on, a physical stop in the market, I find that I become passive about reading the market. I'm no longer reading the auction. I'm just basically watching what the market is doing relative to my stop and until it hits it, okay? So I become very passive, so I don't use actual market stops. Now, that's not what I recommend for everybody. And I'm just answering honestly. I don't want to tell you, yes, I put hard stops in the market, because I don't. I don't recommend that because there are so many risks to not having a stop, okay, including the fact that people just lose their discipline. When they don't use a stop, they let a trade that's supposed to be a 5-second scalp turn into an hour-long trade, turn into a swing trade, turn into something that takes away, 60 or 70% of their account. In addition to that, if you don't have a stop in the market, then if your connection gets lost, if your computer goes down, if your kid decides to, watch Dora on Netflix and suck up your bandwidth while you're trading, then you have no protection at all. You're having to call your broker and quickly get out of your position, and I don't recommend not using stops. Use stops and targets. And then the worst part is that most people think they're better traders than they are. And I'm saying this lovingly, and I'm saying this from experience. I've backed traders. I've put many traders through the process of going from thinking they know what they can do and what they want to becoming just monkeys that are just trading all over the place and wasting a lot of money. People, when they don't define their risk, and people don't like to define their risk, people often believe that they'll only put a trade on when they're certain that they're going to win, and so why worry about risk? And so if you don't define your risk and you don't use a stop, you have a combination of elements there that could be very, very fatal. So it's just really important to define your stop, define your risk by setting your stop and not touching your stop, not giving your trade more room. The way I manage stops is not at price. I manage stops using market structure. I'm using zippers, I'm using the auction, I'm using micro profiles, intra profiles, and things like that. I don't have, my trades don't have okay, I'm going to get in at 22.91, there's a high at 22.92, so I'm going to put my stop at 22.92.25. I don't do that. And those are sucker stops, going a tick above the prior high or a tick below the prior low for a stop is really for suckers, because the market tends to retest the prior high and low quite often, and the failure of the trade occurs much, much earlier than that. And that's a whole big topic on how to identify that and see that your trade is no longer valid well before it takes out your entry or takes out the last high or low that you're trading against. So I didn't put a stop in here because I don't want to fake what I'm doing. I'm sharing with you openly what I do, and I don't use hard stops, but that's not what I recommend. Okay.
Okay. I think that's it. There are several questions, so I mean, try to answer as many as I can or could. But
just one thing, Bruce. I'm just going to put this up here for a minute. My settings. People are going to want to know the settings. My settings for contrast and for the volume dots are these. I have these other products, the volume imbalance and the iceberg indicator and stuff. You may not have those, but I just want everybody to see what the settings are there. And then the settings for the strategies. Let me put that over here. The settings for the strategies are this. For the CVD, it's just for the CVD 13 lot, and this varies. This could go down to 12, could go up to 15, whatever. It depends on where we are. That study is updated every week by Hampton, so I change it accordingly. And then the standard CVD is just there's no filter, but both of those refresh every day at 8:30, and my Bookmap refreshes every day. This is the replay, so I can't do it here. My Bookmap refreshes every day at 4:59 p.m. CT or 5:59 p.m. Eastern Time, right before the market opens, so that I have a new file and a new Bookmap, clean Bookmap, at the beginning of every session. Okay, so those are the settings for those who asked.
One more settings question earlier in the webinar was on the book imbalance and volume imbalance indicator settings.
I don't quite. I'm not quite using those. So I have them set to whatever the default is. I don't quite use those. These the book imbalance and volume imbalance are not something I've investigated. I think they probably have some usefulness. I much more lean on the CVD. I would much more lean on the CVD because it tells you exactly what the lots are, the volume is that is the aggressor, both on the buy side and sell side. But I'm sure others use these and they have their usefulness. It's not something I know anything about, so I can't really comment.
Okay, all right, great. Let's see. Oh, could you just show as well, there are a lot of questions on the widget panel. If you can show how to activate that down below.
Yeah, so the widget panel, these lines here show you the actual widget, so I can turn it off and back on and so on. This puts a graph, this puts your line on the chart. For the CVD, I use both the widget and the line, okay? The settings are what I showed you for the strategy. For the theoretical average, all you do is just turn on the widget. I turn off these P&L and position lines. I'm not sure what they're supposed to mean. I don't know why they're here. I think they're just placeholders, to be honest, that were put in by Bookmap's developers, because putting a position line or whatever is not really helping me with my trading, and I don't like to see my P&L. And by the way, I want to really emphasize, my actual panel does not show P&L. When I'm trading, this is what I see. I see my position, my average, and how much size I've traded. Okay, I do not look at P&L. I do not encourage you to look at P&L, but I put it up here just so you can see the performance against the theoretical average. Okay, that pretty much covers all the settings that are out there.
Yeah, I think you covered all of them there.
Okay, so the Theo average is available in simulator, in replay, in live where I need it. It works in whatever mode you choose. It's just pulling the orders right off a Bookmap, and it should be synchronized with your trading account if you use it in your demo account or live. For those of you who don't have a futures account or don't have one that works with Bookmap, you're more than welcome to just go to Stage 5's website and ask for a demo. And if you do a trial, I believe if you do a trial of Bookmap, it automatically assigns a demo to you. But you can go to Stage 5 Trading and hit Try a Demo, and you'll get a free live feed demo for 14 or 28 days, I don't remember, of the various markets, so you can run it with Bookmap and kind of play with this a little bit. I really think you should have a look at this. I can tell you this, when I was training scalpers in my prop shop, had I had this heat map software, I think the turn for people, and this is just my opinion, the turn for people would have come a lot faster, and it would have been much easier for me to explain things like collisions, zippers, and how the market responds to collisions and things like that. It would have been much easier for me to explain what the size here has done and why that matters. This is a collision here. This is a perfect example of a collision, and what happens after a collision. You know, when the market meets liquidity, the market trades liquidity, it tends to bounce, pull back to liquidity, and move in that direction, or if it meets liquidity, it tends to pull back, break liquidity, come back to the liquidity price, even if there's no liquidity left because it all traded, come back to the liquidity price for a continuation. We see that all the time. We see it in thinner products as well. For example, in crude oil, you'll see that very, very often where, you know, it's just choppy, 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 and then we hit this strong liquidity point and we end up coming back. Wow, this looks really terrible. We come back and we retest that area. Here's an example of it. There's a collision right there. There's some size. There's 265 contracts bid in crude at 53.10. The market moves away, forms another collision, breaks through, pulls to the collision price even though there's nothing there, and continues. And look at what happens later in the session. Once it finds its base and starts to move up, comes all the way up to what price? Anybody? 53.10, the original collision, all the way back here. And that's just a random, I didn't even set that up. That's just a random example. These collision areas are very important, and you need to have a heat map to see it. So I just want to emphasize, I'm not advertising the product for you. I think it speaks for itself. But it's just such an important concept to read and see, especially if you're trading thinner products like gold, crude, NQ, Russell, that sort of stuff. Anyway, I'm way over my time. I appreciate your time, Bruce, and the opportunity to come in and talk.
No, thank you very much, Murad. This was excellent and great new stuff. Going over that unique way of looking at the cumulative volume delta and filtering for larger size, as well as you're showing exactly what you're doing with your theoretical average and scalping in and out of positions and adding more leeway in your stop there.
So for those who want this theoretical average, just hit us up with S5 Bookmap. If you already have Bookmap, just to get in touch with someone on that website, on our Stage 5 website, and they'll help you figure out how to get it. Okay? Thanks, everyone, and I'll leave it at that. Thank you, Bruce, and thanks to Bookmap for having me on. Take care.
Thanks.